As we say, it looks like pretty strong numbers here.
That's right. Those were good numbers for March, and now, we had some shakiness in consumers around the turn of the year, but now it's looking a little better with that retail sales number. We also had great auto sales numbers for the month of March, so feeling pretty good about the momentum here heading into the second quarter. And also at 8:30 we got jobless claims, which touched another 50-year low. So the fundamentals for the consumer seem to be setting up pretty well as we head into the second quarter.
Yeah, as you say, the jobless claims were 192,000, and the survey was at 205, so it did better than the survey. So speculate for a moment, Michael. Is this perhaps the government shutdown? Is that why we had the blip?
Well, so we've had, as I said, some real shaky numbers on retail sales. We had that big down number in December, then it's been really choppy. This does look a little more consistent now with. We're probably tracking real spending growth and consumers around 1.5 for the first quarter, and we think we're coming out of some of the distortions related to the shutdown, related to the weakness we saw in financial conditions around the turn of the year. So this does look like things are kind of finding their footing, at least for the consumer and actually for the broader economy, I think, more generally.
And I should point out that we are seeing markets moving higher on this news. So brings me, Denise, to what we're seeing about consumer discretionary. So come inside the Bloomberg, and the white line is consumer discretionary performance, but then the blue line is the price to cash flow. One metric you look at to see where the valuation is. What's been baked into consumer discretionary? What should be baked into consumer discretionary?
I think what's interesting is what Michael brought up, which is we really saw some weakness around the turn of the year. And there was a big debate on whether or not that this was really negative. Half the time we see real retail sales contract, which we did on a year-on-year basis in recessions, and half the time we don't. What's interesting is even if we debate whether or not it was real weakness or if it was the government shutdown, on a go-forward basis, you have 90% odds of consumer discretionary outperforming in the year after that kind of downturn. So very, very significant odds. And what's interesting is that you bring up the point where it's pretty expensive sector. And interesting, in the odds that I looked at, you actually have just higher odds buying it when it's expensive versus buying it when it's cheaper, which tells me that valuation, it's not like you want to buy expensive stocks historically, but it's not a significant headwind from a probability perspective because of the fundamentals. So we got to keep our eye on margins because that's the critical driver for the overall sector, but all the leading indicators I look at are actually risk-reward positive.
So, Michael, what does this say potentially for the U.S. economy overall? I mean, again, we expected sort of a weak first quarter in terms of GDP growth. So much of the U.S. economy is driven by the consumer.
Yeah, that's right. So, oddly enough, first quarter is looking, after yesterday's trade number, it might be growing around 2.5% annualized in Q1, which is, given all the headwinds we face, particularly with the government shutdown, some other issues, that's pretty good. Now, some of that was an inventory build that should unwind in the second quarter, but I think we're setting up for a pretty good second quarter, too, something probably with another two handle on it. So all in all, given some of the fears we were feeling, a few months ago, things are actually looking reasonably strong here. As I said, the labor market looks good. Housing, we've seen some more favorable indicators there. And then as we were talking about just now, the consumer certainly looks to be performing well, and all the fundamentals for the consumer, particularly the labor market and labor income, look pretty good. So I'd say we're feeling all right about the economy right now.